Hi everybody and welcome to the London Session Update with myself, Kathleen Brooks, on Tuesday the 1st of October 2013. Well, what a historical day it is. The US government has shut down. Congress didn't get that last minute deal. So right now, all non-essential public services in the US are closed. The Senate will meet again at 2:30 today, London time. That's 9:30 a.m. Eastern time. They're not really getting in any earlier, you'll notice, to reach a deal. So right now, we've definitely at least got one day with the US government closed. And now it's a race against the clock. But we have heard from people, from the key US players all the way up till last night, whereby they seems like they found no common ground whatsoever, and actually today of that shutdown we're back to zero, back to a blank slate. So it could take some time. Now remember, anything over 5 days, that could materially impact the US economy. So we could be looking at a bit of a drop in Q4 GDP and impact on things like initial jobless claims. Now, on that point of economic data, we are going to get the ISM releases this week, likewise the ADP report tomorrow. However, very, very unclear if we're going to get the non-farm payrolls on Friday. The last time that the government shut down in the US back 17 years ago now, there was a 2-week delay on payroll. So don't expect too much. The Department of Commerce has gone home. Evidently, economists are not essential to the US, to the functioning of the US government. Some people may agree with that point. So there's going to be no economic data. Economic data calendar is going to be very much in flux this week. So do watch out. Do check our Forex Insider to find out what's out and what's not out. But overall, this supports more QE, and with the markets have actually had quite a sanguine reaction to this. European stocks, they're clawing back some losses after yesterday. Treasury yields are hovering around about that 2.65%, but overall it's not been too severe, the reaction. Now, where we have seen a severe reaction is that the dollar still very much in the doldrums, and that's largely because the impact that a shutdown of the US government could have on growth could mean that QE is on the cards for longer, that tapering is delayed for longer, and that is weak for the dollar. Now, where we've really seen benefit in the FX market is the pound. Take a look at this. This is a chart which shows cable, so sterling versus the US dollar, which is really heading north very sharply, above 162, out to a high of 162.80 now, getting very close to those highs from the 2nd of January. But it also shows the spread between UK and US government bond yields, which is moving in the other direction. Now, that tends to be a warning sign. As you can see, these things tend to move together. So the fact that they've diverged could have been down to that data miss from the UK. The PMI for manufacturing came in weaker than expected in September, suggesting that manufacturing activity may have slowed last month. And that really suggests to us that if we do get a resolution in this US debt crisis, if Congress does come to some sort of decision, maybe because of public outrage, then what we could see is the pound really sell off very, very sharply. That 163 level, we have heard rumours whereby there's a lot of selling interest up there. We think people will try and grab profit as and when they can. 163.80 is the level to watch. That is a high from the 2nd of January. Now, what else has benefited? Well, the Swiss franc. Dollar yen has been pretty range bound, actually. That's because of the announcement of a sales tax in Japan, and an accompanying stimulus package, which has really capped yen gains. But let's take a look at dollar Swissy here. As you can see, very, very weak. And we are testing that 90 level. It's a key level. It's the base of the long-term range. Massive support level. If we get below there, it opens the way to the February 2012 lows when we got to 89.30. And then we're looking at October 2011 when we got all the way down to 86. So some key support levels. If we continue to see a US government shutdown, then we could get down to that 89.25 first, which would open the way to further losses. So overall, quite a sanguine reaction, where most of the action is post this US government shutdown has actually been the FX market. So good luck trading today. Lots of opportunities out there, and please do join us soon for more. Thank you.